All right, back at PN Global News, here with Beverly, Sally, and Dave talking about taxes. Man, you got a good story. I want to kind of complete that story about saving McDonald's $130,000.
Yeah, we had a couple came in. They had worked their way up from cashier at McDonald's to owning 6 restaurants. And they paid over $330,000 in taxes in a year. And
$330,000 in taxes.
It was unbelievable. And we only found them $130,000 a year.
Okay. Only?
Only.
That helps.
So I got to deliver that particular plan, and the owner, and these are hard-working people. I just love this couple. She got choked up. And so I'm pushing a box of tissues over. I go, what's wrong? And she goes, Dave, $130,000 a year. We can hire some managers and probably go on a vacation.
Listen, man, I would have been crying with her. Are y'all gonna take me? Take me on vacation with you. I've been working now for the last 20 years straight.
Hey, it's really rewarding work. I love working with business owners.
Yeah, that's good.
And I have to really piggyback on that. It is very rewarding to sit down and tell somebody you're going to save them some money and see their eyes.
I don't think nobody's going to be really upset at that.
No.
Have you ever got anybody that you saved them some money and they was like really upset?
No.
Maybe upset because you didn't save them more money.
Nah, this is,
Right. Because
That's all I get?
Yeah, exactly. Yeah.
Well, you got more, like, you're not paying like another $40,000 in taxes, right?
And it's per year. So these tax savings roll per year.
Per year?
So the ROI on that is huge.
It's huge.
It's huge.
Wow.
Think about it. Somebody saving you $10,000 a year, year over year over year as a possible minimum. And you think about the ROI on that. I think the ROI on $5,000 a year savings is about 80%.
Right.
In 3 years.
Because I was going to ask a question about what would be the surprise of saving somebody money, but I guess I don't need to ask that question now because Dave just saved somebody $130,000.
Yeah.
So I want to make sure that everybody understands there's a difference between creating the plan and executing the plan.
Okay.
So in what we do, we first create the strategies,
Okay.
just like anything you do. If you're at work, first you put the plan together, and then after you put the plan together, then you go and execute it. So it is a 2-part process.
So what are the time? I mean, we look at time. Like, how much time do you think it would actually take from the inception of looking at everything and putting the plan together and executing on the plan?
Well, I'm going to tell you what I personally love. I love when clients come on board in January, February, and then we get to execute everything, and we have a solid year to say we've executed everything, and this is what we've actually saved.
A year?
Well, it happens faster, but if you do it at the beginning of the year, you get to see the realization. You have enough time to put everything in place and actually see the change in that year. If you come in September or October, you're not going to see everything, the balance of that year.
So I'm going to play the role of the entrepreneur, which I am an entrepreneur. So most entrepreneurs will be like, okay, we heard like April's coming. We know it's coming, right? We know April's coming. So we will wait till about, I'm going to say February, March.
Bad idea.
Probably March, right, Dave? We're going to wait till March because we just been hustling.
That's right.
Trying to keep everything going, trying to pay bills, trying to make sure the staff is paid because if they don't get paid, they ain't showing up. They're not going to hold the cameras and all that kind of stuff for us, So they want to get paid. But we've been trying to do all these things. In March, we're going to come to you, Bev, you, Sally, you, Dave, and say, hey, can you help me with these taxes?
So, Dave, I want you to give your opinion on this. My opinion on that would be this. What you're going to do in 2017 is done, and there's nothing we can do to change that.
Yeah, but it's hard for us. I'm playing the advocate of
but
the
let me
entrepreneur.
finish.
It's hard for you to hear that.
Right, but let me finish. I can't do anything to change.
Right?
I can't do anything to change 2017. But your taxes aren't done yet. You're going to your current professional. But what we can do is take the 2016 tax return, talk about what happened in 2017, and still put some details together that are already aligned when your 2017 taxes.
But are you going to be able to save me any money still?
Yeah. Well, of course. If I do an assessment and find out I can save you money, I can implement those strategies to do that.
So there's an opportunity. Even though I came to you in March, I still might.
Sure.
Find,
oh yeah. Okay. I'm just talking about from looking at it full year.
Okay.
There's some things that take some time to execute, and you can get the full year advantage of that versus partial year.
But even
in the following
full
year, you're still going to get it.
But in the full year, I'm still operating. I'm still generating other things that's going to go into my taxes.
Right.
So,
but some of it's time specific. So if you do something and we only start the execution of it in May, we have fewer months to reduce the tax liability because there's less time left in the year versus if we had started in January. Does that make sense?
No, it does. It does.
You're still going to realize the full value of that in the following year.
Right.
So you're obviously eventually going to realize the full value, but it's just some of the strategies are time dependent, meaning that the more of the calendar year you have, the more opportunities you have to take advantage of.
What's not going to happen though, if you come to us in March, can you lower 2017?
Right.
The answer is no.
Okay.
Because unless you have a time
So I
machine,
think somebody told me that they could do it.
No.
So now
I'm
they're
not
telling me.
uncertain.
No.
Right.
Unless you have a time machine. So for example, a big question in terms of a strategy often is the entity that I've chosen to produce in. I'm a sole proprietor or I'm an LLC. Maybe I need to be an S Corp. Maybe I can add a C Corporation. I can't implement that for 2017 and 2018.
Right. Okay.
So
okay.
a strategy like that has to be in there. Now there is sometimes a strategy that we could reverse engineer our way into a prior year.
Okay.
But most of the time when you come in March, I'm going to be looking at a tax return to see if there are any errors, any repopulation of another form that might get us. Medical expense is a great example where I might be able to move that into a different area of the business.
Okay.
Get a deduction
Right.
where I can't on Schedule A because of the adjusted gross income test.
So what are some of the red flags that really those red flags that hit the IRS? What are some of those red flags?
Well, I love that term because CPAs use it all the time.
Yeah.
And there's more green flags than red flags, frankly. So
Really?
a
Green
consistent-
represents what?
Go.
Okay.
Do that strategy. Red flag is we're going to get an audit. So
Right.
my favorite red flag is don't deduct the home office because that's a red flag to the IRS, and it hasn't been a red flag since Al Gore invented the internet.
Right.
And people went off into home-based businesses. So there are rules to be able to deduct the office, but if you follow the rules, again, it's the speed limit. If you follow the rules, then you get that deduction. But I'm safer as a CPA. I don't have to do as much work if I just say, you really don't want to take the home office deduction because that'll make an audit. It just makes it easier. Now you don't have to pay me to protect.
So
you from an audit.
I got a million questions. So what makes an audit?
A true red flag is somebody told me that I could be an S Corporation
I was going to go there too.
and not have to pay W-2.
Right.
And I save all the self-employment money.
Yep.
That is an absolute programmed in the IRS computer key for an audit. And they're very insidious. They'll let you go 3 or 4 years. Then they're going to audit you, and now they get to accumulate penalties and interest and really
Because you went from the LLC to the S Corp or the C
the
Corp?
IRS rule is that, right, because if I am a sole proprietor, all of my income is going to go through a self-employment tax. If I'm an S Corporation, I get to what's called bifurcate the output.
Right.
I can create a salary and profit, and the profit's called a distribution.
Yes.
The distribution does not have to have self-employment tax.
Hmm.
But the IRS says, what we used to do is we'd say, well, as an S Corporation, I'm not going to pay myself anything. It's all profit. IRS says, no. You're working, you're operating the business, you're creating active income, so you have to have a salary. Nobody works for nothing.
So I think for the listening audience and the viewing public, they need to understand that they need to create a salary.
And that
That's right.
salary,
And it's an S Corporation.
right? And that salary has to be competitive
Fair market value.
with
Fair
other
market
like
value.
people in that industry,
Right.
which is the other red flag.
So I know
That's right.
I know this is not going to be a whole lot of time there, but we've got to come back to really talk about all that because I know for a fact a lot of businesses who go to S Corp, they think they don't have to pay a salary and just take
That's
out
right.
money to do A, B, C, and D.
Nope.
Because they just,
That's right.
okay, we're going to bootstrap this thing, but I ain't got to pay myself no money because I can just do X.
Now you can do that for a couple of years. When the company is forming and not making much money, you don't have to pay yourself a salary. They recognize a startup
Yes.
that we're bumping along, but suddenly you see revenue
Yes.
generate, and if I see no salary, a big distribution, clearly there's income to be paid to the owner. Then the computer says, let's do an audit. It's time to go scare these people.
Yeah. And we like to break a lot of that down because a lot of, entrepreneurs just don't know.
Right.
That's why we have, PN Global News. That's why we built Playbook Investors Network, because it's all about education. But a lot of us entrepreneurs really don't know.
And I will tell you that we have clients that have already been audited,
Yes.
have large debts to the government,
Yeah.
and we try to help them manage that and get them right moving forward.
Right.
Yeah, I too got audited twice, I believe. But I kind of did a little different thing. I wasn't afraid, so I went to the IRS myself every day. I showed up different days as a different person. I said one day I will go in there and I have blue jeans and t-shirt on. Got a different audience. Next time I wear I got a nice suit on there, Sally. Say, how are you, sir? And I got a different audience. But I got a little bit more cooperation, right? They said, well, he came with all this stuff. But I did. I went in and I negotiated. They didn't want to allow my my Schedule C. Because in this,
It's a hobby. They wanted to call it a hobby business.
Well, yeah, but I'm like, okay, in this service business, you wine and dine a lot of clients. You take them to lunch, you take them to dinner, you fly them, you do all that stuff because you want the business. And they didn't want to allow all the dollars that came from Schedule C, and I had to prove it. Like, no, this is really what I do. If I wanted Beverly to come to LA today to present to LA Lakers or Dave, I took care of that because I wanted you to do the business, right, with me. So it was like, well, so finally they kind of came around. Then they asked me to sit on their board. IRS asked me to sit on their board. They did. No, seriously, they asked me to sit on the board. I said, are you going to pay me? I say no. I got PN Global News and Playbook Investors Network. So I'm going to educate everybody about what you're doing.
Well, a couple of stories on the IRS. One is the key thing is you have to have profitable intent.
Yes.
So my brother-in-law had a business that it was a horse on his 9 acres, and he wanted to write off the feed and the veterinary bills and so forth, but he had no income.
Wow.
I go, Floyd, that's not a business. It's a hobby. And, well, can I write off? It's my ranch. I go, no, it's not an expense of a business. The horse isn't even getting rides for, it's not a business. So in your case, you had profitable intent. Amazon lost hundreds of millions of dollars a year.
They did.
For 20 plus years. Never had a trouble with the IRS because they clearly had profitable intent. So when we start a business, we've got marketing expenses, we've got startup expenses, we've got all these things. Those are okay. As long as you document it, as long as you move forward like a business.
So that would be the key, documentation.
That's right.
Documentation's
key.
And that's part of the execution that we go into detail and work with our clients to do, documenting everything.
The other thing in an audit is you do not usually want to represent yourself because the IRS is a bully. They want to bully you into blabbing stuff. Our clients do not talk to the IRS, they talk to us.
Okay.
And
so they let you talk to the IRS.
We're going to talk to the IRS. And so when they say, well, where's your ABC document? Right here. Where's the XYZ form? Right here. Oh. In fact, we've had people come in and I've asked IRS agents before, what would you do if you were auditing a client, one of our clients, and they did this strategy or that strategy or that strategy? You know what the guy said?
I don't know.
He said, well, I'd walk around, take up paper, go back to the office, ask if anybody ever heard of this, and if they said no, I'd just pass you.
Wow.
The stuff that we do is not done for small business. It's done for big business.
But I often ask that question myself, even when I really did go to the IRS to meet with them, but I asked questions, that they wasn't really accustomed to hearing.
They want to bully.
Right. And so I was like, well, what about this right here? And they had to get up and go ask somebody.
Yeah.
So I'm like, well, Sally, how long have you been working here?
Yeah.
Well, I've been working here for like a year, and I said, are you an accountant or CPA? They're like, no, I just, took a test. I got a job. So you just working. You just got a job. You just following protocol. Oh no, give me somebody to do what they're doing. Right? I'm like, I need somebody to really. No, because you just going. No. I need somebody to really understand.
They're trying to intimidate.
Right. Okay.
They want you to give up, and then they want you to settle, and then they're done. They get their ticket punched.
I didn't settle. $82,000 for taxes. I paid $12.
Awesome.
I'm patting my back.
Awesome.
Yeah, but I mean, it was kind of nerve wracking. I'm like, where am I going to get $82,000?
Where'd that come from?
Right.
Well, they're always going to go to worst case. I will say what the IRS is really good at. They're really good at finding, and this is important. So cash-based businesses, mechanics, retail, hairstylists, so forth. You have two sets of books. You don't report cash that comes in. We had a client. He was a psychologist, and we did his blueprint, and so we're moving forward. And he goes, sometimes my clients come in and they pay with cash, and if I don't report that, then that would save me money on taxes, right? Wouldn't that be a tax saving strategy? And I said, yeah, an illegal one. You can't do that.
Right.
They are expert at finding cash. That's what they want to do. So they're all over that strategy, the illegal ones.
Yeah.
The legal ones, they don't know.
Yeah.
So I want to intimidate the IRS. I
like that, Dave. We like that.
I want them to say, they won't even know, well, where's the ABC document? So you're looking for the ABC document? I guess. That's what will happen.
Right. Man, this is important. I mean, it really is important because you see the pain points of most entrepreneurs when we're going around, the states, looking at businesses and stuff, and we were doing a lot of R&D on the ground. The problem was taxes.
It is.
The problem
is
taxes. If you pay too much in tax, you take away cash flow from your business that you could use for other things to grow your business.
That's right.
That's why it's important to the business.
Wow.
90% of the business owners, when they get the tax savings, and I ask them, what are you going to do with it? They're going to put it back in the business. You know what that 10% are going to do? They're going to put it in their family.
Right.
Yeah. Wow.
It's awesome.
So how do you measure your impact strategies or the bottom line for most of your clients?
I think the bottom line is pretty easy. Yeah. They see it on cash flow. They see it on the profitability numbers that they're getting out of their company. They literally see it. It is a cash-based realization through their business.
I like in our assessment tool, we have a net profit percentage. And typically, a business ought to be having a net profit of at least 10%. 10%, I call break even. If it's less than 10%, you need to work to get more profitable. But if my net profit percentage is 10% and I save $20,000 a year in taxes, what is that to the top line revenue? What would I have to earn top line to get that same net bottom line benefit of $20,000? With at 10% roughly, it's $200,000. So when I get a prospect or a client who goes, well, 20,000, I'm doing pretty good. 20,000, it's not. I don't know if I want to go to all this trouble to get tax efficient. And then I say, well, what's your net profit? Well, it's 10, 15%. We calculate that. So what would you have to do to earn $200,000, an additional $200,000 in gross revenue? Well, that's a new machine, or that's a sales guy, and then a support person for that sales guy. And now you're looking at $500,000, $1 million. It's like, oh, that's hard. That's hard.
Yes. Yeah.
20,000 in tax savings is not hard. Somebody else does that. PJS does that for me.
Yeah.
I don't have to do anything. I just give you some information, and then you crank that, and you get me into that. Okay, I'm there.
Wow, that's really incredible because, like I say, the lack of knowledge and education in this space is really lacking.
Right. It is.
It's really lacking, and it's actually a tragedy in a sense because
we're trying to fix that.
Right, and I'm glad that we're aligned together so we can fix that. But it's almost like, man, it's mind-boggling because you really do have owners who've been in the game 15, 20 years and still don't know any of this.
And there are owners in the game 15, 20 years that have been paying too high taxes for 15, 20 years.
Yeah, I just want to know that I've been paying too high. Sal and Dave, you're saving us.
How many times have we heard, where have you been all my life?
Yeah, almost every time.
Right. I'm going to ask you, where have you been all my life?
It's been in the tax.
Apparently I'm mad at you. Why did you keep away from me? So how important is timing to tax planning? How important?
Yeah.
How important is the time?
It's crucial.
I know we talked about us giving you the taxes in March, but how important is that time?
The earlier the better. I mean, I like to say in the first quarter, I'll tell everybody, thank goodness you're here now because we've got most of the year, as Beverly was saying, most of the year to get this planning done now and execute. Second quarter, I say, thank goodness we got at least half the year left where we can do it. Third quarter, I'm saying, you've got to move forward now. There's no time to lose because there are some things that we can implement that we can call back to January 1st if we're still in the same year.
Right.
But it gets harder and harder because everybody gets more sensitive later in the year. And so now we're doing, I think we've got 10 tax blueprints going right now, which is a very high number because they all crush in on the fourth quarter. And they're not going to get as much benefit as if they had started earlier in the year. But it's becoming sensitive.
But they'll still get the benefit full year 2018.
In 2018, move forward.
Yeah.
Wow. Man, that's incredible. I mean,
There's
time
no
is everything
way,
then, right?
No way you lose on this. Either you pay nothing and you're tax efficient, or you get a bunch of tax savings. PJS will do well, the business owner will do well. The only entity that loses is the federal and state government, and I'm okay with that.
Yeah, we're okay with that.
Yeah, right.
Yeah, we're okay with that.
Because we're using their laws.
Yeah.
We are to the letter. We'll toe right up to the line. We will never cross it. We call it paying the lowest legal, moral, ethical tax possible.
Okay.
There's nobody sitting around coming to tell you that you're paying too much in tax. They're only going to tell you when you're not paying enough.
Right, exactly.
No, and that's what you get. 99% of the time, that's what you're going to get in. Yeah, like, hey, you got to pay a little bit more taxes.
That's right.
Like, wow, really?
Right.
Man. But I mean, it's such a pain point, for businesses.
It's universal. Right.
You're trying to do everything you can to keep that business operating.
That's right.
Keeping cash flow coming in.
And nobody's helping you.
No, absolutely not.
Except Penn.
Penn is definitely going to help.
Right.
Absolutely. That's why we built Penn. But we had to have subject matter experts like yourselves.
That's right.
Right.
That we can, put you out there and get, that viewing audience, that listening public to understand how it works. I mean, it's not really enough time. That's why I know I got to keep having you guys come back. Maybe we have some Q&A with some other business owners, especially when we go in the studio, so that we can make it very, informal, because I want them to be able to feel good and ask questions.
And right now, I want to make one critical point that we made at the beginning of the show that I want to reiterate before we close, is that the tax planning is to create cash flow. But ultimately, the cash flow is to create an opportunity for you to become financially independent, which is either, basically creating wealth through the growth and the value of your business, or creating wealth by investing it personally in ways that get you to the point where everything you do in your life is about the options you want to create for yourself.
Right, absolutely.
Instead of being directed in certain paths, because financially, that's the route you have to go. Everybody talks about retirement and getting ready for retirement.
Retirement, what is that now?
and that's true. But that's
what is
because
retirement?
People haven't planned. People have thrown money out of the window that they could have done other things with. And ultimately, as an advisory firm, our goal is to use the opportunity to save you money on taxes so that you can drive that into the opportunity to build wealth.
It's holistic.
And I don't ever want to forget that. It's very holistic.
And it's all about the opportunity because, like I say, uneducated, don't really know the process, don't have the subject matter experts really, saying, hey, this is what you really need to do.
Right.
Not understanding the time frame or when you need to actually, get with, Dave or Sally or you, Bev, PJS. Not knowing all these things that's a problem.
Right.
That's a problem. That's why we sit here today, like trying to, echo this out to the masses.
Right.
And everybody's different. This is not a template where the same things go for the same people. People are unique, and that's one of the values that we have at our company. Is people are unique. And
you're telling me about people?
People are
oh my goodness.
That's what makes it beautiful, and that's what makes it fun.
Yeah.
Everybody gets to retirement, but there's millions of paths to get there. Everybody gets there eventually, but how they go is very unique to that individual, that family. If I'm married, if I'm single, if I'm head of household, if I have kids, if I don't have kids, if I have to take care of my elderly family members. There's all kinds of things that are very unique to the individual.
Yeah, and
Correct.
those are the things that we just really want to continue to expound on. Make sure that there's, education, access to PJS, to get people educated, understand the process of how they get to the next level.
That's right.
And, have a nice retirement.
Right.
Take that trip that they never been able to take, right, Dave? Did you say people $130,000? $130,000 can take a whole lot of trips, right?
That's right.
So, I mean, that stuff is incredible. It's incredible. It's important, So the things that we need to do is what we're doing now. We're educating, we're talking about it. I think people are afraid to ask questions sometimes.
Mm-hmm.
And then also not just being afraid, a lot of times people, exactly.
Yeah,
a lot of people don't know the right question to ask.
That's right.
They feel trapped.
Yeah, you
in
do.
the situation that they're
you walk
in.
into a tax place, you don't know what question to ask. I'm
That's
just
right.
waiting on you to give me all answers.
I'm hiring you. How many times have I heard this where I've asked the CPA, should I be in this corporation? Yes. You've been my CPA for 5 years. You're just now letting me know. It's like if you ask the question, they'll give you the answer, but they won't give you the answer to the question that you should have.
Yeah.
I'm going to give you the worst thing I've ever discovered.
Uh-oh.
And I know I'm
the
speaking.
Worst thing?
The worst
Is this
thing.
before West Point or after West Point?
The worst thing I've ever had happen was I asked a client for their tax return. Oh yeah, my tax person just filed it. And I said, well, just send me a copy. Well, I haven't seen it. I said, you signed a tax return and you don't even know what your
They didn't
tax
explain it.
planner, they didn't explain it to you. You just signed it and let them send it in and you don't even know what you signed. Don't ever do that.
Right.
You need to understand your taxes.
Yeah, and I'm telling you, and I'll say it again, a lot of us don't know.
You need to
And
understand your
you're
taxes.
right. You're totally, absolutely right. You do need to understand. But when you don't understand and you don't know the question to ask and they're not telling you, you're still in the same boat.
That's right.
You just don't know.
So you need to get somebody that's going to explain.
No, we need PJS, no question about it, but at the same
You
time,
need to understand your
right,
taxes.
I get it, but I'm telling you, the probability of people understanding and having the questions, the Q&A to ask, is probably like, let's say 50-50.
And I'm not saying you have to be in bed with the advisor. I'm just saying that when you sit down to sign it, make sure they explain to you what you're signing to send into the IRS.
See,
That's all
Beverly,
I'm saying.
and this is what we say with PN and Playbook, you still don't know. If it's not somebody like yourself sitting down going through this,
They're not explaining
and it's not going to happen.
Right.
And tax accountants, they're busy too. And they're busy why? Because they're trying to make money.
Right.
So the more clients they get,
Right.
the more money they
Right.
make, right? So they're going to push you on through the process. Okay, got it. You didn't really see it if you don't know. So it's a problem. And it's a problem that you guys are addressing, in the
Yes.
right way with PJS and, making people understand. And it's you got to duplicate yourselves in probably 1,000, 2,000, 3,000 different ways because this is a mass community. Right now, this is truly an entrepreneurial society.
Right.
That people are really leaving
That's
corporate
getting
America,
better.
right? They
That's
leaving
right.
corporate America
That's right.
at 20 years, taking the early packages and going in and doing their own business.
Exactly.
Exactly right.
I get this every day. We got executives leaving, and I probably shouldn't name or call you. Okay, I'm getting all these. Don't say it, right? Don't say it. But we got people leaving other companies, to align themselves with us because they want financial freedom.
Right.
They want to be able to move around the country. Good tagline with Southwest Airlines. Ding, move around the country. That's a nice
Yeah,
tag.
that's
But
right.
they want to be able to move around the country, and they want to be able to help and monetize while you're helping people.
That's right.
That's right.
Nothing's wrong with that.
No.
Yeah.
Nothing's
That's
wrong
a
with that. Yeah.
We're all
Yeah.
corporate people.
Nothing wrong with monetizing
That's right.
while you're helping somebody. So
That's
there's nothing wrong with that at all. Because, now I can come shop at your store.
That's right.
Yes.
I can come I can go to Pizza Hut, or I can go to Starbucks and buy that high-priced tea I've been buying, Earl Grey. It's a little high. I think you need to come down the prices. But anyway, I mean, you could do those things, and when you don't have that extra income that we just paid in taxes, that's a problem.
Enjoy and improve the quality of your life.
Yes, absolutely, absolutely. So, but I'm gonna tell you, I'm really thankful for you, Sally, and Beverly, and Dave for joining us here at PN Global News today. Make sure you view us on PlaybookinvestorsNetwork.com. You can see us Facebook. If you missed the show today, you can always go back to PN Global News YouTube and pull up the show. See these wonderful people here. replay this tax program over and over and over and over and over, because you want to get it in your system. It's just like, hey, you want to clean your system out? Talk to Dave, Sally, and Beverly, and just clean this tax thing up.
And let them know where they can find me.
So, go ahead. Tell them exactly where you can find PJS.
The website is pjsservicesgroup.com.
So that's
you can get to the website,
PJSServicesGroup.com. You can find it there. And also, PJS is an extension of PN that will be traveling in all 50 states to help people understand this tax and where you can go, how you align yourself with PJS. And $20,000 will come look at you and give you that free assessment, right? But after that, we're going to charge you a little bit of something if we save you some money, right?
That's right.
That's how we make money?
That's right.
I think we better tell them again, so it's free. It's free. It's free. After, if you're at $20,000 in taxes, paying $20,000 in taxes, then PJS will come and see you and give you a free assessment. And then if they're saving you money, then by right, they should make money because they saved you $130,000 or $230,000 or just $50,000. And that means something.
Right.
You bet.
So that means something. So always view us every Thursday from 10 a.m. now to 11 a.m. every Thursday at PN Global News, Facebook. You can go to YouTube, see us on PN Global News, Playbook Investors Network. So I'm Rodney Woods. Beverly, thank you so much for being here today. Thank you, Dave. Thank you so much. Sally, thank you so very much. We're going to make sure we keep them coming back because we need this. So everybody, tune in to us every Thursday, 10 a.m. to 11 a.m. PN Global News, and we'll see you next Thursday.